Well, good morning, everyone. Welcome to our Thursday morning trading room. If you haven't already been watching the news on TV, you know that today is the 30th anniversary of Black Monday, October 19, 1987, and I guess the market was a little bit scared because look at what happened in the overnight. Right out of the London Open, a big sell-off, and as such, we are left with a rather substantial opening gap this morning. The bar is actually a little bit more active, and certainly the volume seems to be up as well, at least for the first few minutes of trading. This is the most active I've seen the bid and ask bars here in quite some time, so we'll see what happens if we get any kind of follow through today, or whether the market's just going to continue bouncing about. Here, a very early signal in the Raptor. We're producing a hard edge bounce signal. Oop, and that's going to run away on me now. I was going to take advantage of that second push entry. That's all right. If they're going to rally today, we should get at least one other opportunity to get in. The hawk now with a first micro macro cross signal. So we have a chance to buy that, and I might try to run this out. The market, like I say, very, very active. Certainly a lot more active than what we've seen. Oops. Look at that. They're actually unfolding so fast I can't get an order in. And now that hawk signal also turning into a macro pullback as we get back to the macro line. And we're back into the hard edge of the trading band as well. My goodness, we've seen more volume go through the market in the first 3 or 4 minutes of trading than we did all day yesterday. Okay, the hawk now into yellow bars, so I can cancel that order. And I think I'll just take a back seat for now. Let them settle in a little bit. I don't mind trading slow markets, providing, of course, the market goes somewhere. Fast markets are very often a little bit more difficult. Mark, you're a brave fellow right out of the open here. Mark says, I picked up a couple $100 on this Falcon trend change signal right off the opening bell. Yeah, all in, all out. I think that's the safe way to go today. I was going to run that hawk trade out if I got brought in, but I don't know, that might have been a little ambitious. So here we are checking out now the lower end of the trading range. The hawk already in full-on bear mode. The Falcon working a trend change signal lower. The Raptor and the Eagle both still a little bullish. So we're getting a few mixed signals here. Yeah, Mark says, I was thinking the same. Mark says, I thought the market might try to get into the gap, but now it's turned south. Good morning, Dan. Dan says, good morning, Eric. I'm a total beginner. Could you at some point explain the cloud? Okay, I'm assuming you are referring here to the Raptor. The Raptor, of course, incorporates elements of the Hawk Scalper, that's here in the top left, Falcon Swing Trader, top right, Eagle Trend Trader, bottom left. So the Raptor is a hybrid of those. The cloud is taken from the Eagle Trend Trader, and we've actually doubled it up. Now the Raptor cloud primarily gives us our directional bias. When the cloud is stacked with the soft edge above the hard edge, we call this area here the hard edge, and this area here the soft edge, that tells us the market is bullish. We're going to be looking primarily for buy signals. When the cloud reverses and starts moving the other direction, then the market is going to have a more bearish bias. And when the cloud is all, I gotta get past the overnight here, into a couple days ago, where are you? There was a segment here where the cloud was all twisted up like a rope. I'm not gonna find it now. Oh, there it is. When the cloud waffles back and forth like this and it gets all twisted up, then you have no trend. All right, so once again, when the cloud is above the hard edge, we're primarily bullish. When it's below the hard edge, we're primarily bearish. Dan says, my first time here. Well, welcome, Dan. And for those of you who are new in the room, please don't be shy about asking questions if there's something you don't understand. Don't be shy about requesting markets. I'm following the NASDAQ. That's kind of my pet market, the one I like to follow. I've also got the euro, dollar, and gold up on my other monitor. But I would be happy to pull up any market you would like to see, providing, of course, I can get it on my data feed. All right, so the Hawk had here kind of a combo. It had a 4-arrow consolidation and a macro pullback. And here the Raptor just produced our number one signal. Now the number one signal is the cloud crossover signal. It develops or prints when a new trend is developing or the market conditions are such that a new trend may be developing. Come on, give me another little pullback here. Well, look at that. I am certainly not used to this much activity. Dan says, I do mostly the pound US dollar pair. All right, I'm not sure I get the pound dollar combo, but I can certainly show you the futures version, which will move exactly the same as the Forex pair. So if you're trading the pound US dollar, I'm assuming you're probably trading the overnight session, London Open, occurring right around here. Here's that cloud crossover signal that we were just talking about. So you can see the cloud goes from a bullish cloud, changes to a bearish cloud with the number one signal. That's the cloud crossover signal. There's two components. First off, the clouds cross. So you go from bullish to bearish or vice versa. And the signal will always be preceded by this pullback and rejection. So the pullback tries to move the market higher, and then the cloud supports the new direction of prices, and then prices come out, produce a signal. That's your number one cloud crossover signal. I'll show it here to you on the bullish side. So the cloud was bearish, turns bullish, there's that pullback, prices are supported in the new direction, and there's your number one signal. Tends to be a pretty high probability signal. Now, you need to take it in context, of course. Remember how I mentioned to you the chart where the clouds were all twisted up like a rope? Well, you may not want to take signals immediately after that type of formation. It's just that sometimes the market needs to develop some sort of direction before you can get some accurate signals. So try to remember the context. And right now, the context is definitely looking bearish. Getting a little bit of a bull push. Yeah, there's actually some news on the horizon too, isn't there? Mark writes, Trump and Yellen meeting today to discuss the future chair of the FOMC. He's expected to announce the new chair before November 3rd. Okay, we're working a possible late filter entry signal here on the Falcon. Now you can anticipate the late filter entry. If this signal prints here at the low, the filter will flip back over, you see? There it goes. So the late filter entry signal occurs when the filter goes out of sync comes back into sync, your trend line never changes color. That's a pretty reliable signal as well on the Falcon. The problem I'm having with this one is how far do I need to risk the trade? There's very little structure here right now. Had a nice little 4-arrow consolidation here on the Hawk as well. So no shortage of signals this morning. A plethora of signals. Okay, we're starting to introduce a few more yellow bars now in the Hawk scalper. That might be hinting at some bullishness, maybe. I wouldn't get too crazy on the buy side. Yeah, you're right, Steve. Steve writes, today is the type of day if the market continues the bullish drift, we could make a month's profit in just one trade today. Those are the best kind. The one and done. Okay, so we're getting another late filter entry signal here on the Falcon. I don't like to see too many of these producing within a trend. Like any signal, usually the first one is the best, and then as you get more and more of the same signal, the market kind of gets a little tired. Okay, another first micro macro cross here in the Hawk. And prices continue to slip. Well, it should sure give the talking heads on TV lots to discuss today. Yeah, I thought, Mark says, I just picked up another 300 on that late filter entry, so his day is done. I had a feeling you might have tried that one. So the late filter entry signal here on the Falcon just came down, touched the profit objective. Could see a little bit of a reaction here. Ooh. Look at them go. Um, okay, Frank asks a very good question, and this is a question I get a lot. Frank asks, good morning, Eric. Well, good morning, Frank. Between all the birds and the raptor, in your experience, which of them has the most consistency in providing accurate and profitable signals? You're not going to like my answer. All of them. And but it depends on the signal. So for instance, let's go here. We'll just look at a couple of these, but let's take a look at the hawk, for instance. The mistake that most people make is they think they need to trade every single signal. Oh, it's a scalping tool. Look at all the great signals I get. Well, yes and no. For instance, with the hawk, I avoid yellow signals, yellow bar signals. Why? Well, because sure, sometimes they work out, but a lot of times they don't. The exception is the 4-arrow consolidation. That pattern is so strong that I will take it even on a yellow bar, and I think we had one right here. Yes. 1, 2, 3, 4 arrows in a consolidation pattern. That has a very, very good chance of hitting its profit objective, which it did. This yellow signal, however, I would have avoided, even though it also worked out. All right, so if you concentrate on the high probability signals, you will do just fine. If you don't know what the high probability signals are, please ask, but for instance, here on the hawk, many of you will have seen this before, but for the benefit of those who haven't, these are the high probability signals that we tend to focus on in the hawk scalper. So we've got things like the first micro-macro cross, the macro pullback, the 4-arrow consolidation, the one I just mentioned, the post-consolidation pattern, and then the red bar buy or green bar sell. Note that there are many other signals that printed during this rally, but these 5 are the ones that tend to be the most reliable, which is why I focus on those. So if you're looking, say, at the hawk and you're looking at just your highest probability signals, well, you're going to be looking at things like maybe the first micro-macro cross signal. That's that first signal where the micro line and macro lines cross over, everything is in sync. Very, very high probability signal. But here is a first micro-macro cross that did not work out. So even though it's a very, very high probability, it's not 100%. But at least 80% of the time, this signal will meet its profit objective. All right. So if you're focusing on the high probability signals, you're going to be okay. You don't want to be chasing every single signal. Ditto for the Falcon. If you focus on the high probability signals like the trend change signal, which occurred right here, the late filter entry signal, which occurred right here, you'll probably do just fine. The Eagle also has theirs. I'll just jump here to the Raptor. The Raptor, we went so far as to identify the high probability signals with these prompts. Now, very often the signals will coincide with each other. Right now, you can see the Raptor is actually producing a counter trend signal, but we don't have a signal on the Falcon yet, and we do have a counter trend opportunity here in the Hawk, where we could buy the failure of this green bar sell. All right, so the signals produce independent of each other. So when you ask which one is the best, or which one should I focus on, they've all been programmed differently for their specific task. This is not like taking a 5-minute chart for scalping and a 15-minute chart for swing trading and an hourly chart for trend trading. No. The programming behind the hawk is entirely different than the programming behind the falcon, eagle, and raptor. The programming behind the eagle is entirely different. Totally different animal, totally apples and oranges kind of scenario. So you need to take each one for what it is. But as I said, if you're looking at just the high probability signals, you'll do okay. And I'm going to pick on Mark here for a second, because Mark's been kind enough to share his results and the signals that he takes. And to be fair, Mark, he'll tell me when he has a losing trade as well, but it isn't that often. Why? Well, because I know that Mark looks at things like the first micro-macro cross, right? So there's your first micro-macro cross. He ignores all the other signals. Why? Because he knows the first micro-macro cross is probably the highest probability signal on the hawk. So he focuses on that one to the extent that he doesn't care what else happens here. On the falcon, I know that he likes the late filter entry signal. This one right here. Why? Well, because he's done his homework. He's scrolled back through his charts and he's found all those occasions where he gets a late filter entry signal, and he'll look and he'll say, okay, that one worked out. Okay, that one worked out. And he'll just go through his charts and, like I said, do his homework, if you will. So when you get a late filter entry signal, he feels confident enough that he will take that signal. Note that he'll take that signal to the exclusion of everything else. And again, I'm just kind of picking on Mark here because sometimes people think if I say what I'm doing, it isn't valid, right? I'm here on my soapbox telling you, you should do this, you should do that. And in the back of your mind, you're saying, yeah, okay, fine, that works for you, Eric, but it doesn't necessarily work for me. Well, here it's working for someone else. And I think another important thing to do is that you take your profit when you have it. Part of the reason the Hawk Scalper is a very reliable tool is we tend to have a much more conservative profit objective. Normally, we are all in, all out, and normally we're looking at only a 10-tick target, a $50 target objective. Now, that might not sound like a lot. You might think, oh, $50. How can I make any money trading for $50? Well, you see, where a lot of people go wrong in trading is they get the production line mentality, where they think they need to do more to make more money. The fact is that if you can take just 2 trades a day and make $50 on each trade, so you're netting $100 a day. Now we're going to ignore commissions and fees here, just for the sake of simplicity. But if you could take 2 $50 trades a day, and you're going to gross $100 a day, there's 200 trading days in the year. That's $20,000 on a single contract. Okay, $20,000 not enough for you? Don't trade more often. Rather, increase your position size so that instead of 1 contract, now you're trading 2. If you still manage to do that 2 $50 trades a day, now with 2 contracts, that's $40,000 over the course of the year. Still not enough money? Take 3. That's $60,000. Still not enough money? Take 5 contracts. That's $100,000. Now, of course, you need to build up to that. You can't start with a $10,000 account and start trading 5 contracts. You're going to be risking far more than you can afford to lose when the trade does not work out in your favor. But it's an excellent question, Frank, and I'm so glad that you asked it, because people look at their system and they see, oh, well, Eric has all 4 tools here. Do I need all 4 tools? Well, it's helpful. The 4 tools are all specialized to perform a task, but if you only have the Raptor, no, you've got everything you need right there. But what you want to do is you want to focus on the high probability setups. You want to stay with the trend as much as possible. So here we have, now a hard edge sell forming. Can I risk it up there? No, I can't. So I've got to run a slightly tighter stop if I'm going to take this trade, maybe here to the hard edge. All right, and it's a little bit cozy because there's very little structure here, right? Ideally, believe it or not, the best stop is above the high of the morning, but that's going to be out of reach for most people. Okay, so the market now hit my break-even trigger. Hopefully it'll drift here below the low of the morning. I was a little bit late getting in, and I think that may end up hurting me. We may see the market bounce here just before the low. Come on. Come on. You can do it. Hooray for us. So, if you do those 2 things, I think if you focus on the high probability signals, you focus on taking profit, and you know what? There's going to be days where the market just explodes, right? You get these monster moves, and you would have taken your profit. You could have taken your profit back here, set up your trade like that, take your profit, and the bottom falls out of the market, and you're thinking, oh my gosh, why did I take profit early? Well, when you get into a position where you can actually afford more than 1 contract, you can have a runner in play. You see, I've actually got mine set up here on a 50-50 split. But the way I set up the trade, I could only afford to take 1 contract. If you can take more than 1 contract, then you can afford to have a runner in play for those times that the market explodes like this. And you can hit those home run trades. But otherwise, it doesn't pay to be greedy when you're trading. And, I'm not saying that in the total negative sense, but a lot of times you can fool yourself. Just be content with what you get. Remember that most times the market is not trending. It is actually only trending about a quarter of the time. So most times the market will just be moving in a rather sideways type direction. But yes, I get up on my soapbox a little bit, and I apologize for that. My grandfather always said I'd be a good preacher, and now you know why. But I appreciate the question. It's a very good question. And I hope I didn't make it confusing. Mark says, preaching to the choir, Eric. Music to my ears, high probability signals and patience is the holy grail. It's a, it's a war, not a battle, to use another analogy. You want to be around for a while, not just another flash in the pan. Scotty asks, do you offer a payment plan for this program? You'd have to double check with Adam. I know he has in the past, and let me give everyone Adam's email if you don't have it already. It's adam@indicatorwarehouse.com. Pretty simple email. And he's the fellow to ask. He's the one who would know. Okay, now we're actually getting an interesting little counter trend opportunity. I mentioned this before, but the best counter trend signals, that's the number 2 signal, develop after a number 3 signal. And we've got a chance at a second push entry here as well. Now, going counter trend when the market is obviously in a downtrend is a little bit nervy. When the market is in trend, I try to stay with the trend as much as possible. Because, of course, if you get stuck in a counter trend trade, well, it'll be impossible for you to take a with trend trade. The number 2 signal, that's the counter trend signal here on the Raptor, is the counter trend signal. It develops, there's 2 components to that. First off, before you have a counter trend signal, you must have something resembling a trend. And I think we're okay on that part. So check, we got a trend. Second, you need what we call a test of the extreme and a failure. The test of the extreme is just the market trying to regain the trend and then coming up short. In this case, the extreme is the low. So you get the failure. A lot of you will recognize this as like a 1, 2, 3 bottom, or a W formation, or even a head and shoulders, upside down head and shoulders formation. However you want to see it, the principle is the same. It's showing you that the market is no longer able to maintain the downtrend, and as such, a reversal might be likely. But like I said, a lot of times when I'm in a trending market, a strongly trending market, I will avoid all counter trend signals. Counter trend signals they usually end up costing me money unless the conditions are ideal. For the most part, you will do better staying with trend. Question from Wolfgang. Wolfgang is asking, Eric, have you ever traded the German future FDAX? What do you think? Does the Raptor work in this market nearly as well? Actually, one of our Raptor owners trades the DAX regularly with the Raptor. And last time we spoke, he said he was doing well with it. I used to trade the Stocks 50 a little bit more. The Stocks 50, of course, a little bit slower than the DAX, but yeah, by all means, the DAX works just fine. Let me see if I still have it in my data assortment, and I will pull it up for you. No, I don't, but let me load it. Some traders feel the DAX leads, so they'll watch the DAX for hints of what might happen in the North American markets. All right, so here now, the DAX on the Raptor, and let's go back here to the European hours, kind of shutting down a little bit as far as the North American session goes. Okay, here's the London Open. So again, that same #1 signal that we've seen across the board, huge sell-off, a with trend signal that actually had very little follow-through. That surprises me. I would have expected a bigger retest here of the lows, but the market made a quick reverse, came back with a counter trend signal. This is rare that you at least don't see the market get to its high probability target, but there you go. Like I said, the system is good, but unfortunately it's not 100%. That's followed up with a #1 signal and then a hard edge bounce signal, which are both with trend signals, those reaching their profit objectives. And then we're kind of moving sideways a little bit, get another hard edge bounce signal. That one had some decent follow through to it. So yes, it looks like the DAX signals are fairly reliable as well. That's just on the Raptor, of course. But pretty much any market that you can plot on your chart is tradable. And the reason that is because we took great pains to base market signals on, they're not just based on, you know, like whatever, a moving average crossover or something like that. There's actually about a half a dozen algorithms working behind the scenes here, stuff you don't even see. Signal parameters that have to be met, both in terms of momentum and price. It isn't just, like I say, a moving average is crossing over and an oscillator triggering whatever amount. These signals are actually quite involved. So we'd like to think that they're universal. We like to think that they apply to all markets. And for the most part, they do. Okay, so there's that counter trend signal now. And had I taken the signal earlier here on the hash mark, I would be at my profit objective. But because I took the second push entry, I need to sneak a couple more ticks, and there we go. Hooray for me. Yes, certainly. Wolfgang says maybe we can see the DAX working on another day. Yeah, for sure we can. Dan's asking, as a Raptor owner, do I have access to the 3 birds? Now, I think you're referring here to the Hawk, the Falcon, and the Eagle. Well, like I say, the Raptor is a hybrid. It incorporates elements of the Hawk, the Falcon, and the Eagle into one system. And that was actually a result of owners requesting that. We had a lot of owners actually trading off of laptops and saying, can you give me one screen to watch? Or I'm used to only watching one chart. Can you give me one chart to watch? And that was kind of the impetus behind developing the Raptor. But the other three birds are available. You'll have to talk to Adam about the pricing, however. I'm totally oblivious to that. Thanks, Mark. Mark says, nice trade. Well, like I say, the counter-trend signals, you have to pick your moments. And they do tend, the counter-trend signal tends to work best after a number 3 signal. The number 3 signal is the continuation signal. It's the hard edge bounce. So whenever the market retreats to either hard edge of the cloud, we anticipate a reaction. Don't always know if it's a big reaction or a little reaction, but we anticipate a reaction of sorts. So we got a reaction here, the market comes, so you can see before that reaction we got the number 2 signal. We got another number 2 signal here. But there was the number 3 signal, there's the follow through. Here's another number 3 signal. We're already getting really, really close to a double bottom, so this would not have been an ideal signal to take. Maybe a second push entry could have kept you out of that, or perhaps if you were a little faster with your stops. But regardless, note the number 2 signals that are printing after the number 3 signal. That's going to give you a little better follow through, I think. And once again, we don't need to chase a lot of signals. Here in the trading room, you'll perhaps see me take a few more signals than I normally would. In fact, this was something that came up the other day. How, you know, there's been requests for a live trading room versus the training/trading assortment that we do right now. And if that's something you would like, then by all means let Adam know, because like I said, he's the fellow who makes these kinds of things happen. But in a live trading environment, people are often very surprised how little I trade. They get this mindset, right? They have this picture in their mind, whether it be from watching movies or reading books, or they think of this frenzied type trading environment, right, where we're capitalizing on every move. This is how my cousin likes to trade. He loves to trade in hindsight. He has the gift of 20/20 hindsight. And he likes to say, wow, yeah, look, we could have sold it here, and we could have sold it again here, we could have sold it again here, and we could have sold it here, and oh yeah, well, we wouldn't have sold it here because it didn't go down anymore. We could have bought it here. And this is how he trades. And this is how a lot of people come to trading. They think, oh, well, that's what trading is. I got to be busy. I got to be in and out, in and out. I got to be taking lots of trades, making lots of money. No, not really. In fact, that normally has the exact opposite effect. I mentioned a gentleman by the name of Judah Toussaint. He's way back in the, I think, 1880s he was trading, kind of in the infancy of the whole stock market developing. And he was a commodities trader. Never had a losing trade. Imagine that. 100% success rate. Do you think if Mr. Toussaint was alive today, he would be trading every signal? I'm going to say no. I'm going to say he would probably be ultra particular. I mentioned also a fellow I know who trades, he only trades 3 or 4 times a year. That's right, 3 or 4 times a year. I don't think I've ever seen him trade 5 times a year. I think 4 trades a year was his max. And he makes a living trading. So try to get that, like I said, that production line mentality behind you. We're not on a production line. We don't get paid for what we do. We get paid for being right, and only for being right. Frank says, I did contact Adam, and he said that they have no plans for a trade room right now. Well, the more requests he gets, maybe he'll see some urgency behind it, but at any rate, that's where it sits right now. We kind of have the education bit, and I try to find a few good trades as well. I tell you, if we did do a live room, that would be the pressure I would feel, is that people would expect me to take lots of trades. People would see the market fall off like this out of the open, and they would say, well, why didn't you take that trade? What's wrong with you? Well, if you want to trade how I trade, I don't usually trade right out of the open. We'll get Mark or Peter or somebody to do the open signal. While we're waiting for the market here, I think I'll just, for the benefit of the new people in the room, I think where a lot of traders go sideways as well is they kind of forget the objective of this whole exercise is to make money trading. I know that sounds silly, but when you consider that a lot of people, after they've had a losing trade, so for instance, let's go back here to this first micro-macro cross that failed this morning. Okay, so here's a first micro-macro cross signal a couple minutes into the session. You may have set up your trade like so. The market goes up, comes down, tanks, and takes you out, and you've just incurred a loss. Now, rather than say, oh, well, it's that 15–20% of the time that the signal fails, and maybe make a note in your trading journal and say, maybe I ought to give the market a couple more minutes out of the open, especially after the market just had a huge overnight decline. Remember? The overnight was, we had this enormous overnight decline lower. You're not going to see it here on the Hawk because it's too far back. But, you know, maybe you'll make a note in your journal and say, Eric, you know, the overnight was extremely strong to the short side. Maybe I shouldn't get so bullish, especially so early, a couple minutes out of the session. Rather than say, oh, I made a mistake, most people will say, oh, there's something wrong with my system. I know. I'll put Bollinger Bands on, and I'll put on what else can we find here? I know, I'll put on the momentum indicator, and I'll put on triple moving averages. And, well, that's enough for now. Oh, and I'll use Woody's CCI because I've heard good things about that. And before you know it, their chart looks something like this. Because their objective has shifted. Their objective is no longer to make money. Their objective is now to filter out all the bad signals. And that is a futile objective. You will never, ever filter out all the bad signals. I know you don't believe me, you're going to do it anyways, but trust me, you will never, ever filter out all the bad signals. And the problem compounds itself because now you have all this stuff on your chart. How in the world do you make a decision? Because I guarantee you, your signals will conflict somewhere along the way. And then you'll start playing with the settings. You'll say, oh, okay, well, 14's too fast. I know, I'll put in 21 because I've heard that 21 is a good number. And so on you go down the rabbit hole. So I'm not kidding when I say don't lose your perspective of why you're actually doing this. You may incur a losing trade from time to time. This is why we protect ourselves right here. Not by trying to eliminate every poor signal. You know, you can see this was a poor signal, like I say, because the overnight was insanely strong to the short side. Where's that move now? There it is. See, look at that monster move. We left off at around 61.20, and we open at, where did we open? 60.95, somewhere around there. That's a monster gap. That's huge momentum. You didn't make money because you tried to buy. Where are you? There we go. You didn't make money because you tried to buy into a downtrend, into a very, very strong downtrend a couple minutes into the day. Not because the hawk gave you a poor signal. If your stop was deep enough, that signal will work out. But the problem is, who can run a stop all the way down there? See, here comes the market. They're going to try to get up there to this 60.91 area. But like I say, none of us in the room, I'm fairly confident in saying, have the ability to run a stop that deep. So try not to get sidetracked. Try not to lose focus of what we're trying to accomplish here. And after that big move lower, we're kind of in a sideways drift now, aren't we? This is typically the time of day that we see a reverse in the market. So if there's been a dominant trend, a lot of times the market will try to reverse it at around 7:30, 7:20, 7:30, somewhere in there. That specific time, of course, that would be 10:30 on the East Coast. Once again, a lot of yellow bars here in the hawk scalper. That's kind of telling us the market's kind of neutral. The Falcon flip-flopping a little bit as well, the filter and the trend line getting out of sync. And the Eagle also in a bit of a sideways drift, and the Raptor working a trend change signal, came back with now a counter trend. If this trend's going to continue, number 3 signal, that's the hard edge bounce, might be a good one to look for. In the meantime, we're just watching and waiting. For somebody to tip their hand. They're pretty balanced here at the moment. All right, so the Eagle back now to the hard edge, the Raptor back to the hard edge. The Falcon and Hawk both looking a little bit more bearish, however, so we're getting some mixed signals here right now. If you were inclined to stay with the bigger downtrend, you could certainly short this signal. That's another strategy in that, let's say you've identified that the market is in a downtrend today. That means you're going to take all sell signals. You're going to avoid any buy signals. You essentially commit to one side of the market. What that does is it helps you, well, it immediately eliminates half your losing trades, right? If you're going to go back and forth on the market, you double your chances of losing money. But if you're only going to stay with one side of the market, you have that much higher probability of staying on the right side of the market, in which case you could have sold this signal, you could have sold this signal, you could have sold this signal, and now you have another saleable signal. You actually have a chance for a second push entry as well. All the second push entry means is that we allow the signal to engage, we see where the market flinches, and then we look to enter below that extreme point. If you're trading a smaller account, this is a great way to ensure that you're only brought into the trade on some renewed momentum. It does require a little bit more patience and discipline on your part, and occasionally you end up in a little bit of a bind because, of course, we're leaving that much on the table just to get entry to the trade. And what that means is our profit target should be right here. But because of the later entry, we're having to stretch the trade a little further. But we'll see. We'll see how that plays out. It's one of the perks of being a room moderator, I suppose. I can show you stuff like that. See, this hard edge is going to be problematic. Remember how I said whenever the market hits the hard edge, we anticipate a reaction. Oh, there we go. We got a follow-up number 2 signal. Come on down. 60-60 is going to be pushing the profit envelope, I think. Come on. So there's that reaction now to the hard edge. The market even coming up short of the first high probability profit objective, which makes me think it owes me one more push lower. We'll see whether we get that. We're kind of drifting here at the moment. Not that much participation. Where's that next resistance line? I probably should have placed my stops above the resistance line here. That should give me a little bit more staying power. Add a little bit more structure to the trade as well. right, so come on down. Last chance for the sellers. If they don't pull it together here, we're going to see the market rally higher. So if the market does turn and start to head lower, I'm going to start to bring my stops in a little bit as well. Nicely done, Mark. Mark says, took that first trend change signal on the Falcon. So I'm thinking that was either here or here. This is the full trend change signal. This is the early trend change. Not that it matters. Oh no, on the upside, Mark says. Took it on the upside, so probably this one right here. Again, an early one. Yeah, Mark says the early trend change. But he says it squeaked out $200 on 2 cars, and now I'm done for sure. Took a while to hit my profit target, so 3 for 3, and I'm not going to push my luck any further. This last trade was a little nerve-wracking, took a lot of heat. Talk about a test of patience. Yes, the markets will do that. That is for sure. All right, the seller's coming back now, giving a little pushback off of the 60.74 area. That was another reason I wanted my stop a little bit further away. I think originally my stop was 60.74 half, and you can see they tick 60.74 3/4. So the trade didn't have much of a chance. But we definitely need to see the market trade below, say, 60.70, form another low bar here, and then there is a chance that the sellers may press it lower. Oh, I see. Mark says I took the signal at 718 on your chart. Oh, so this one right here. For those of you trading the Falcon, one thing you want to take note of when you get your signals like this, and this is a trend change signal, but you see how we have this gap away from the line? There will be a tendency for the market to pull back into that line. So you're not going to want to be too quick with your stop for that reason. When those trend change signals occur a little bit closer to the line, like this one right here, there tends to be a little bit more follow-through right away versus the one where there's a little bit of a gap. Yeah, Mark says, waited 30 minutes on that trade. That can be a long time. All right, it looks like the buyers in rally mode following through on their earlier push, and they're probably going to tag me out on that one. But normally that works. If you, like I say, if you have an overall bias on the day, you can usually get away with sticking with, in this case, your sell signals. But of course, the band was bullish here, so that's what you get for doing a counter trend trade. Counter trend trade's not that reliable. Here's that number 3 signal that I was talking about. Waiting for the width trend signal, and you can see that one would have worked out just fine. And those counter trend signals, those number 2 signals, do tend to work better after a hard edge bounce, after a number 3 signal. So that's a little something you can make note of as well. I think the sellers are far from done, though. I think it's not wise to count them out. But you may need to wait a little longer. Maybe another half hour or so before we get a bearish pushback. We'll see. Mike is asking, how do you manually enter the number of contracts rather than the quantity that my trade manager calculates in sim mode? What you need to do is here on your risk percent button. It doesn't look like much of a button until you go over it. If you click on that, it will toggle into manual mode. When you are in manual mode, it will default to this quantity right here. So if you set this quantity at, say, 7 contracts, then when you take a trade, you will have 7 contracts. Or whatever the value. So just make sure you go into manual mode. The risk percent mode defaults to that value. Manual mode defaults to this value. The buyers really coming through here. I didn't think they had it in them. Dan says, sorry, I was called away to my day job before I heard the answer to my 3 birds question, but I'm back now. Here I got to look back to find exactly what your question was. I think you were asking if it was included with the Raptor. No, it's not. They're separate. I actually went into a nice little tangent about how all the birds are programmed to recognize their specific market environments. So the hawk actually programmed for scalping, the falcon programmed for swing trading, the eagle programmed for trend trading, the raptor, of course, incorporating elements of all 3. But if you would like the full package, certainly contact Adam at indicatorwarehouse.com, and he can work that out for you. Otherwise, the video, I'm not going to torture everybody to hear it again, but the video will be posted at the Indicator Warehouse YouTube channel later today, and you can go look for it there. The nice thing about watching it on YouTube, of course, is you can fast forward as well. Well, boys and girls, we're still watching the market rally up a little bit here. I've got an appointment at the top of the hour, so we're going to close the trading room here just a couple minutes early. I was going to blow off Friday's session, but after today, I think it might be worth checking it out. I was going to suggest we take an early weekend, just because the markets have been so quiet and so dismal. But we'll come back for Friday morning. We'll finish here with Dan's question about the Geiger counter. Dan says, can you tell me a little bit about the Geiger counter? I think volume is important. Volume is very important, and to that end, there's a couple of things that we can use to follow volume. First, before I get into the Geiger counter, let me point out that I'm using the Indicator Warehouse Dynamic Equivolume bars. Equivolume is a style of charting that will print the volume on the chart relative to the bar width. That was a very backhanded way of saying that. Let me put volume on here and it will make more sense. So, you know, the traditional, oops, I didn't, the traditional volume histogram. Looks like so, and it can be a little bit difficult to interpret. So the dynamic equivolume bars will print wider bars where there is more volume, narrower bars where there is less volume. So it gives you a very easy to read visual of the volume on your chart. The Geiger counter is actually a tape reader. It was developed because one of our owners said, can you give me a method to know when it's time to get out of a trade, when I can see the market momentum shifting? Well, that was kind of what spurred on the Geiger counter, but it's a very useful tool. I'll show you here on the 6E because it's already printed a little bit further. But like I say, it's a tape reader, and there's actually 4 components to the Geiger counter. First, we have the tape history, so you can see the volume of buying and selling relative to each other. So you can see big, here we had a rather large selling spike. It looks like it overwhelmed the buyers for the most part. We have the needle, which tells us the immediate short-term bias. So right now it's more bearish. This dial is particularly interesting. When the dial, see how the dial's turned and stuck? When it sticks and holds like that for 3 or 4 or 5 seconds, that tells you that there is a lot of selling going on. They're overwhelming the buyers. I would fully expect the euro to come down a couple of ticks as a result. We also have the current bid and ask, which is replicated here. And then there's also this little envelope, this little line that produces around the current bar. That shows you the immediate short-term bias. So looking at this, watching the Geiger counter here, I would have more of a bearish bias, even though the envelope is green right now. So let's just stay with it for a moment and see whether it actually takes lower. Oh no, I can't. I've got to meet Adam at the top of the hour. But that's how the Geiger counter is interpreted. So a very useful tool for watching the order flow, for getting a feel for the market. So for instance, if you were long this number 3 signal down here, and you saw the Geiger counter keep pulling here to the short side, and all these big selling spikes, you might think now is a good time to bring your stops up, maybe a little bit more aggressively. Maybe go to something like a parabolic stop strategy, or maybe even a bar high-low strategy, something that will keep your stop in a little bit tighter to protect more of that open profit. So that's how that's an easy way to use the Geiger counter, and that's actually why and how it was developed. So we can look at that some more tomorrow as well. All right, gang, be careful out there. The bulls have made a comeback. I do expect one more bearish push, however, and I think there could be a little more bullish follow-through as well. Wolfgang asks, the Geiger counter is working best in a small tick chart, in a 1-minute chart, not so good. No, it's live. This is live data. This is your bid and ask. It doesn't matter what your time frame is. This will look the same on an hourly chart as it will on a 5-minute chart. It will look the same as on a 5-tick chart as it will on a 50-tick chart. This is live data flow. All right, gang, I really do need to run. I will see you tomorrow. Bye for now.